Hello YouTubers, welcome back to Independent Investor for November 11th. It's a long one today, part 4. I was just talking about McDonald's and doing that long put. Again, I don't like doing long puts because again, the price has got to go in the right direction and it's got to in a certain amount of time before the expiration. So I typically do credit spreads for income, but I feel time now there might be a good opportunity here. This is almost 8-9 years into this bull market now. Like I said in the other parts of this update, there's some cracks starting to form. Doesn't mean those cracks won't be covered over and we continue on, but I think again, 6 to 12 months, I'm pretty positive on some of these, and again, they're quite small, and just kind of stepping in there. As I say, it's that kind of sine curve transition from being long to maybe cash to being short as the market kind of shifts. And up to now, I've been mostly all long, but I transitioned those long positions into higher dividend paying, lower beta, which I've mentioned in my previous videos. And last week I continued to move more to cash. I'm almost 40% cash now. And still the remainder is a lot of high dividend, which I've again mentioned in previous videos. But getting back to McDonald's here, so I got the 175 long put, did it midweek there, and we're already down to 165, and so I got intrinsic value of $10 already, and I paid $18.50. So for this to start to work, all I really need is for that share price from now till the 19th of June 2018 to drop another $8, and then I'm in the money. And even if it didn't drop that, but the volatility increased, say from 17 up to 25 or 30, I'd probably be in the money, because the way options are priced, the main thing is the time to expiry, and the volatility, of course, and interest rates, which is a minor factor in this case because rates are so low. So, and of course the share price. But so if we drop into the 130 range, something like that, we could this could easily, you know, be 100% or plus, and I think there's a chance if the market really gets wobbly that these we could wipe out at least the last year's gains and be down to the 112 area. So this could end up being quite profitable. And maybe as a sign of this, that it could happen. It did trade off a bit there last week, and the trend, that's nothing significant. But what really prompted me on this was looking at Coke, which I think I'd mentioned, how it, just a while back, was, I mean, another blue chip, right? This is Coca-Cola bottling, and COKE. And just back in July, we were at 240, and we had a large candlestick down, like I mentioned last week, and then we had another one. So we've lopped off almost $50 on that, on a blue chip company, again, because it's debt and what's going on. So we're starting to see these little pockets here and there. So I thought, well, if this was to happen to McDonald's, then it would be kind of priced into the options, and it would be hard to play it. So I wanted to position myself kind of ahead of the curve. And that's what I did with this. So I'll have to see how this plays out. I'll mention quickly just kind of a fun little trade. This was Roku. ROKU. And you probably have one of these, or you know friends that have one, or they're built into a lot of TVs now. And it's just basically your Android kind of streaming box for your TV, right? And I read an article, it's kind of interesting. They went public last year, I think around 16 or 17, went all the way up to 30, came all the way down to 18. And their sales have really been growing, but all the focus has been on Netflix and you know, the FANGs, and it's actually price to sales ratio was not too bad for kind of this, what's kind of in the hot sector right now. The Roku boxes are really cheap, so there's not much of a profit. I think you can buy one for like $70 at Best Buy or something like that, and that was the revenues. But they're really shifting their revenue now more to advertising, getting a cut of that, and also with the TV manufacturers, because like I think your Samsungs or your new TVs like that now already use the Roku in their TVs. So again, I don't know a lot of. I read that article and I thought, oh, this looks a little bit interesting, and I bought just like 300 shares. And because it had very high volatility, I did cover calls right away just to try to get some income and then protect the downside a bit. And if the earnings didn't come out like 2 days later, and the stock went from like 19 and hit a high of 36, so almost doubled. And unfortunately, I won't get all those gains because I did the covered calls at 20. I got 285 for that. I did one at 22. I did one at 25. I did one at 30. And I might keep that last one if it trades down. And even if I don't, I got $3.22 when I did that. So I don't, you know, it gets me up to 33. I did some puts below, which gave me some, and those were spreads, credit spreads, like I say, I usually like to do. But I think even just on the income premiums I received from that was like 17, 18% in a couple of days. So again, I might lose all my shares depending on where this comes up, but I think I'll watch it. I think if we have a bit of a correction, this will probably likely come back down. It's still losing a lot of money. I think it lost $8 per share. But some of these companies, the earnings per share don't matter so much as we've seen with Amazon. It's all about growth and market share. So it's just one of those lucky trades that happen once in a while. And but I will continue to monitor it. Maybe if we have a sell off the market and we get right back in the 20s again, I might. And if it looks like earnings are possible, then I might consider rebuying it. So I'll just mention one other one that I think I brought up last week, and I've been pretty happy with it. And that's just Terra Nitrogen. I say I bought that around 82, and mostly just for a dividend play. We're seeing some turnaround again in the fertilizer prices. It's been like a long drought for them, and it bottomed out nicely there, double bottom around 75. Again, this was beautiful dividend, 7%. So I'm pretty encouraged with that. I have bought some more. I'll probably just sit on the sidelines now for a while, but I just thought I'd give a quick update on that one. So that's kind of basically, I think I've covered everything I wanted to for this week. And again, this is just a commentary. This is not financial advice. And I look forward to doing a weekend update next week. We'll see what happens if the market